start now. Good evening, everybody. I hope you can see my screen.
Yes.
Okay. Please, as you are joining, please try to mute your mic so that we don't send the feedback into the, because as I'm streaming this meeting, I'm recording it live on Facebook. On YouTube and on Instagram. So if I get any feedback on the meeting, it automatically reflects in the recording. So as much as possible, if you get logged out and come back, please try to mute your mic. All right, let's get started. Good evening, everyone. Welcome to Crypto Pulse Weekly, our weekly review of the markets and basically what's going on with Bitcoin and other cryptocurrencies of interest. So let's get started as usual. We'll go through our market review, talking about Bitcoin and a number of majors. Then we'll talk about what is happening in terms of the market capitalization, in terms of crypto vital signs. Then from there, we'll go to our knowledge transfer session. And then, as usual, we'll take question and answers. Because we have a lot of new joiners, both on the Zoom and on the Instagram live, I am taking a particular session today that I think I've taken a long time back, maybe like June last year or thereabouts. But I'm taking it again today just for people to understand what this is all about, because I see some questions coming up on the WhatsApp group. And I think if you have this context, it might be able to provide you with some understanding, background understanding of what exactly we're talking about as per cryptocurrency generally. So because of that, I will delve into some basics during the crypto drip, and then I'll take some question and answers. So let's get started with the market updates. As you will probably have observed, we have sort of hit a crash from 58,000 to 44, I think today. It's now 47 as at the time of speaking, but we've done a seesaw essentially in the price of Bitcoin in the last 1 week. So we did hit new all-time high at 58 again. We keep making new all-time highs, but we found strong rejection at 58,000. We've done 54,000 plus today, 44,000 plus today. That puts us around 25, 26% correction from the top. In my opinion, I think it's good enough to catapult us to the next all-time high. So if you understand how the price of Bitcoin moves and other assets, it moves in a wavy fashion. So it goes forward like 5 steps, takes 2 steps back, then goes forward again like 10 steps, take 3 steps back, and continues in a similar manner until we enter the bear market. And even in the bear market, even though it drops like, it can drop 20 steps and try to recover by 1 step, but it still, it still moves in that wavy and zigzag pattern. And as a result, you will see this kind of volatility and, changes in movements throughout the course of the year. At some point, I'm going to ask you to, take profit and sell your assets to look to buy at lower prices. But right now, we're still on the upward trajectory. And I think the short-term outlook of 61 and 63,000 is still very much in play. In terms of regulation, as we spoke last week, Nigerian government seems to have made a U-turn about crypto regulations. And as I said very passionately the week before, that I think it was a very stupid move. It will have given us an opportunity as a country to take a very pivotal role in the emerging digital economy of the world. But it seems that people are not, I don't know, maybe the government is not, well, obviously the government is not skilled enough and they're not curious enough to find out what's really going on there, because considering our population and our innovative workforce, I don't want to use just the word population, but the percentage of the youth that are involved in technology, we stand a very significant chance of not dissociating now. What's that word? There's a word that's being used in business. Distinguishing ourselves yeah, sort of distinguishing ourselves as a country that, that could be a digital hub. That was the kind of dream I had, with Nigerians being very passionate and aggressive people generally, and very very ambitious. But it looks like the government is totally at a loss of what's happening. So even though they're saying there's a U-turn, I saw the clip for the address from the central bank, and I couldn't finish watching it because I was too disappointed. I couldn't just stomach the level of pus, as they say in medical terms, the level of purulent stuff that the guy was, giving on national TV. It's quite sad. Even at that, I heard the vice president talking about, regulating or prohibit cryptocurrencies today. And someone was chatting with me on the call before we started the session that he thinks that the vice president might have cryptocurrency. I said, of course, it's not a dull man. He's a professor of law. He's smart and he understands what's going on in the world. That even though he's found himself in a totally incompetent government, I think he knows enough to position himself. And if he doesn't know, I'm sure his children would have told him that this is the next level. This is what's happening in the world. So we have that kind of mixed messages coming from Nigeria. Somebody was asking me about, the stance of the United Kingdom, why the FCA seem to be hostile towards cryptocurrency. And I explained to the person that, you see, what's happening is monetary fiat policies are failing. Monetary policies have failed, essentially, all over the world. We've all tied the world's economy around the US dollar, and the US dollar is printing money at an astronomical rate. And it's not solving the economic problem, because it's just like you're window dressing a wound that's deeply infected. What is going to happen is you're going to have a major systemic infection from that kind of wound, and the person is likely to die from sepsis if you don't treat the wound. So in the same way, the government and the economies of the world are faulty, but instead of fixing the underlying problem, the governments are printing money. They've called this all sorts of names. Back in 2008, 2009, they called it quantitative easing as a way to get out of the global economic crunch. Now they're going to call it stimulus, palliative, or whatever they want to call it. It's basically increasing money supply. And when you increase money supply, or the supply of anything, you decrease the value. And that's why it's a problematic thing for all countries. Because when you decrease the value of money, that means people have to work twice as hard to earn the same purchasing power. So let's take Nigerian dollar, for instance. Sorry for the diversion, but I need to bring this in context. Take the Nigerian naira. I said Nigerian dollar. Nigerian naira, for instance. Naira was at some point last year, maybe like 300 and something dollars. It's selling at 500 now, meaning that what you could buy in dollars with naira is now less than 20% of what it was, probably more than that, of what it was at the beginning of last year. Same with the US dollar itself. The US dollar in real terms has lost 15% of its value in the last 13 months. So monetary supply is weakening economies of the world. And because of that, people are going to need to work harder to earn the same amount of money that is not going to be able to buy what they need to buy. So let's say, like like an analogy that somebody was giving about 10 pounds. No, he was giving an analogy of 100 units of different currencies, 100 euros, $100, 100 pounds, and 100 naira. And he stated what those things were, their naira equivalent. Then when he got to 100 naira, he showed two very thin wraps of gala, and somebody was making a joke that even those wraps of gala are not as healthy and beefy as they used to be. They're now thin and looking very aesthetic. So it's a bit difficult to keep up with that pace of inflation that is happening on the markets. And I try to explain to everybody, the reason we're talking about this is because people are losing purchasing power. So every year that the government comes and posts a figure and say this is our inflation for the year, what they're telling you is that this is how much the buying power has weakened. Now, that is the official rate. That is not factoring in how much money was printed in that year. If you now factor in how much money was printed in that year and add it to the official inflation rate, what it means is that people are sitting on an inflation rate of anywhere between 7 to 10 to 15% per annum. Meaning, if you had $100,000 at the beginning of last year, by 2030, that money is going to be worth less than $10,000. So whether the government agrees or the government does not agree, that's what is happening. And that's why the governments all over the world, many of the governments are posturing in a very ambiguous manner. So if you talk to the UK government, UK will say they want to be the base of innovation for the next 10 years. At the same time, they will say cryptocurrency derivatives are not being allowed in the United Kingdom. So when you ask them what's not being allowed, they will say it's the derivative, but it's not the underlying asset. But when the news media carries it out, they say cryptocurrency is banned in the United Kingdom. So they create this kind of mixed messages to dissuade people from moving value from the current fiat system to cryptocurrency. And whether you like it or not, it has come to stay. You can decide on which part of history you want to be. Just like when the internet came and, there was a lot of noise about the dot-com era. I remember then that was when I started learning about computers and programming, even though I didn't go far with programming then, but I did learn a lot about computers, about typing, about operating systems and all that. But if I didn't take that position at that time, I wouldn't have been able to take other opportunities that came further down the line. So this phenomenon that we're having with cryptocurrency is like the internet. It's one of the biggest invention in modern time, because this is going to change the way money, assets, and value are being realized in the next decades to come. So I just needed to make that detour to explain why governments are a bit shaky and a bit panicky around regulation, because many of them don't understand it. For the few that have an idea, they have no clue on how to regulate it. Like I said last week, that the Philippines bank was trying to get KYC on their customers. US as well was trying to get in principle, they're saying to the exchanges that you need to give us anti-money laundering and KYC for all the customers that you have. But what I was telling the person was that, see, the current technological advancements, even in the crypto space, is light years ahead of what the government is thinking about. So what the government is thinking about now is to 2013. It's applied to 2013 in real times, because that was when you should have been talking about AML and KYC. Right now, you're talking about decentralized finance and decentralized exchanges. So the technology itself is light years ahead of the government regulation. So it's because of that you have government people like the Treasury Secretary Janet Yellen saying that Bitcoin is not efficient, and that it's initially she said it's being used for nefarious activities. Then she said it's not efficient. And I like two responses that I got from two very respected people. I respect Kiyosaki because Kiyosaki taught me about money, assets, and wealth. But I have another mentor in Tika Tiwari, who's a crypto guru, and the analogy he gave was the best analogy. I think Kiyosaki was a bit being philosophical in his response. But Tika Tiwari said, absolutely that's complete nonsense. That is the same way like saying you have a Mack truck. A Mack truck is like one of those Dangote trucks. Let me use that. That's very common in Nigeria. So you have a Dangote truck, and you want to use a Dangote truck to pull something that is just like the weight of a Volkswagen. It's inefficient because that's not what those kind of trucks are made for. But if you put a 10-ton or a 20-ton or a 30-ton behind that truck, then you're using that truck for what it's used for. So for Yellen to say that cryptocurrency or Bitcoin is inefficient, it's out of context, because yes, if you want to use Bitcoin to move $5 or $5 from myself to yourself, maybe it's inefficient. But if you're talking about corporate scale or central bank scale interbank settlements across nation being done in 30 minutes, yes, those are the kind of things that Bitcoin is used for, or those are the kind of areas that Bitcoin finds its strength, because you can move $5 billion in 30 minutes for less than $100. That's not possible with any other asset class, be it gold, platinum, titanium, diamond, anything. In fact, there's nothing that is worth more than $1 million in precious stone or precious metal that you want to move that you will need at least 5 to 3% for logistics and security. So for you to be able to transfer that amount of value within a very short period of time is converting energy from one form to another, as they will say in physics. I was explaining on the WhatsApp group this this evening that physics says energy can never be destroyed, but can be transformed from one form to the other. So when you convert the kind of logistics and security and monetary energy that you will have used to move money in a traditional way, and you put that into Bitcoin, which you can move in 5-10 minutes, it's a lot. And that is where the value comes from. So when people say, where is the value? That is the value. The same value that Amazon is providing, collapsing all the shops all over the world into a platform where you can buy anything and get it delivered. That is the kind of value that this brings to the world. So this is already changing the world. We might not see it now, but 10 years, 5 years down, we will see that this has already changed our world as we know it. In terms of sentiment, there's a bit of mixed sentiment now because of the macroeconomics in the market. So there's a 10-year treasury bill in the US market. The market is approaching the anniversary of the COVID crash in March. So there's a lot of uncertainty, but that uncertainty obviously plays into the hands of whales and big buyers. And that's why you see there's a lot of accumulation. Like I put there, 13,000 Bitcoin moved off Coinbase in the last 2 hours. 13,000 Bitcoin is like more than $1 billion in Bitcoin. And I mean, just moved like that. The only reason we know about it is because we have applications that are monitoring the blockchain and are being reported. So you can know that, okay, this kind of transaction happened. So yeah, that's the kind of thing that cryptocurrencies and Bitcoin are doing to our world. In this news, we have fresh investment data from last bull run that says that we have not really started the fear of missing out from institutional investors. So what this is saying is that we're not there yet. That this correction that we had over the last 1 week is just the, if you will, the warming up phase to us slingshotting into higher prices. And this is against, as I said, the macroeconomic problem that we're facing, or macroeconomic uncertainties in the US, the fact that the stimulus is not yet out, and the fact that the volume of purchases that we've had on chain is lower than even what we've had so far in 2017 and 2018. So yes, those big volumes in purchases on crypto, on the blockchain are yet to be made manifest. So we expect that these big volumes will come in the next 2 to 3 months. Like I told people on the WhatsApp group, I think the next month and the one after are going to be a very fantastic one for crypto investors, because we're going to likely have a big altcoin season. And then, there's a stimulus package in the US that's going to be released. That stimulus package, I can tell you that more than half of it will find itself in the cryptocurrency space. So, and we're already over $1 trillion in terms of market cap. So we expect that to really push the price higher. Last week I was talking about Ethereum hitting all-time high. It seems to do another all-time high and did 2K, but it's been quite sluggish, to be honest. It's been quite sluggish in its performance relative to not only Bitcoin, but other altcoins. So when you look at the Ethereum Bitcoin chart, it's not as fantastic as it normally is. And partly because the gas fees are crazy. So gas fees are like transactional fees that you incur when you carry out transactions directly on the Ethereum blockchain. Now, because most of the DeFi infrastructure that started the decentralized finance subsector of crypto was built on Ethereum, anytime there's a lot of DeFi activity, Ethereum gas fees goes through the roof. So now, because of that gas fee, people are getting pissed off, and we now have contenders. I'll talk about the contenders in a bit. So because we now have contenders, and the contenders seems to have been, they seem to be moving ahead with their production in terms of the platforms and the capabilities of their platforms, it's more and more becoming difficult for Ethereum to hold down the monopoly. So what I think is going to happen is 2 or 3, at least 2 of these contenders are going to take the space of, are they going to eat the cake of Ethereum during this bull run? Ethereum will still perform well. I think Ethereum will probably still do anywhere between, 5 and 10,000 eventually. Some say 20,000, but let's say conservatively 5 or 10,000 at the peak of the bull run. But when you compare it to what the others will do, I think the others will outperform Ethereum. So As I told somebody, I sold all my Ethereum to other coins last week because I think I'm going to get a better return for investments. And of course, in comes Cardano. Cardano is now number 3. I think we talked about Cardano a bit last week and during the week on the charts as well. So Cardano is an ecosystem coin, promises to do what Ethereum is trying to do. Now they have some major upgrades coming in, and because of those major upgrades, they are able to position as the next big rival. BNB was doing that last week because BNB's price was going through the roof last week. But BNB is like, sorry for the analogy, but it's like the made in China of Ethereum. So BNB is like a clone of the Ethereum's technology, but offered at a far cheaper price. So what BNB has done is BNB used to be an utility token for an exchange, but they've evolved themselves from that, and they started delving into ecosystem plays. They bought up platforms. Now they're providing the same decentralized finance matching capabilities that Ethereum is providing at a far cheaper rate. And because Ethereum already has a larger user base in terms of the exchanges, it helps them to harness that user base and put that into their DeFi platforms. But right now, Cardano has been developing since 2017, and it seems that they're now about to launch their smart contracts ecosystem, and that's what's pushing the price of Cardano up. Like I told somebody, it was a good time to have bought Cardano. Now, 2, 3, 4, 5, 6 weeks ago, but it's still not too late. I think I was thinking about it today, and I was like, man, there's nothing stopping Cardano actually from going to $100 at this rate. If they do come through, they come through with their technology and the smart contracts platform, invariably they're going to be direct contenders to Ethereum. So as of now, as of today, they're batting number 3 in terms of market cap. They've displaced Binance Chain. I talked about Binance Chain last week. Binance Chain was selling for 300 plus last week. Cardano is only $1, 1.02, if I remember very well, or something, 1.2 or something like that. It's just over $1. So Ethereum, Cardano, Cosmos, and Polkadot are the 4 major plays that are standing to seriously challenge Ethereum. They're the ones challenging Ethereum. So out of those 4, Binance, Cardano, Cosmos, and Polkadot, I meant to say, those are the serious challengers. And I'll explain why Polkadot is a very serious challenger. I already explained why Binance was a serious challenger. So they just dropped to number 4 this week because of Cardano's upgrade, and because, of course, a lot of people sold off on their Binance profits. Binance did like 100% in a few days. For a coin that had been dragging along for so many months, it's just incremental gains. So I think the sell-off and this market dump of Bitcoin affected the price of BNB, but because Cardano was already down, so Cardano is appreciating currently as we speak. Polkadot is very, very significant because it offers a promise of what Ethereum has refused to achieve. So for the purpose of some historical context, I'll explain why Polkadot and Cardano seems to be very much in contention. You see, the guys that started Polkadot and the guy that started Cardano, they used to work with Vitalik in Ethereum when Ethereum started. They reached a point of disagreement when it came to deploying Ethereum 2.0. So the Polkadot or the Cardano guy felt that Ethereum was not able to deliver on the promise of the 2.0 upgrade, and the Polkadot guy also felt same. So they went their separate ways. Polkadot's juicier, let me use that word, than Cardano is that Polkadot already has, it's already propagating, let me use that word, it's already manifesting the promise. So Cardano is, they're building the platform, they have developers and all that, but they're just going to launch the smart contract and all that. But Polkadot is already doing that almost secretly, but it's not secretly, but They're already doing that in the background. So I deliberately brought up this stuff. I posted it on the WhatsApp group as well. I deliberately brought up this stuff to show you the major tokens. I mean, these are not the only tokens you have on Cardano ecosystem right now. These are just the major ones that are known to the markets. They have hundreds of other small projects that are already brewing in the Cardano ecosystem. So the way the Cardano ecosystem is structured is that instead of having a master blockchain or a main blockchain where everything is sitting on that contributes, a lot of throughput and congestion, and that might increase the fees, they have what you call parachains, which is like the concept of sharding that Ethereum 2.0 is supposed to be built on. So basically what they're trying to do is instead of pulling all the energy into one blockchain and causing congestion of that blockchain, they will have separate blockchains that are doing separate things, but each of those blockchains have like a Ridgeway or a backbone blockchain into the Polkadot master blockchain. And because you've decentralized each of those blockchains into different functions, they're able to operate at a faster rate, and time to value is also faster. So I think Polkadot is the most underrated player out of the top four that I've mentioned, which is Binance, Cardano, Polkadot, and BNB. And this is the reason why. They don't even have an exchange, but look at the amount of projects they have already. I mean, part of the coins I've shared on the, on the WhatsApp group was, I think, Polkadot itself. I shared Kusama, which are like the big market cap coins on Cardano exchange. We have the PHA, you have Refinance, you have Polkastarter. Those are huge caps that are already in the market, and they are really strong projects. And one thing to notice, while these are very strong projects, we're not just in it for the fundamentals, as they say, or what the technology can do. We're also in it for what famous Ivan would call fundamentals, which is the ability to, to derive value in the short term and make maximum gains. So when you read some of the white papers of these projects and you see what they're set out to achieve, it has a lot of promise. It's the same way where Tesla is, a company that is making cars, electric cars, batteries and all that, and it's not turned profit up until last year. But because of the promise of what it's delivering, people are buying into it and you're getting a lot of returns. So I think in terms of returns, Polkadot will probably be the highest, followed by Cardano, followed by BNB, followed by Cosmos, and probably followed by Ethereum, in that order. In terms of major cap, high return investment, I think Polkadot is going to take the lead. And I think the month of February is going to prove me, month of March and April is going to prove me right on that, because I think many of these Polkadot projects are just going to blast through the roof. So that's on the side for Polkadot. The next news talked about this North American ETF. I talked about this last week, that the first exchange traded funds in North America happened to have been in Canada through the Toronto Stock Exchange. Now, the important thing about this is that on the first day, which was last week Friday, when I was breaking this news, they had already done $165 million for the first day. Right now, they are at $624 million, and it's just barely 9 days that they started this ETF. This kind of volume is not matched by any ETF, in the world. And they've not done 2 weeks, just rest that has been shown with this ETF. We have CI Financials saying they want to file, and I think I talked about that last week. But now they're not only filing for Bitcoin, they're also filing for Ethereum to give people an opportunity to buy the exchange traded funds. Exchange traded funds are like stocks of an underlying asset. So it gives people the opportunity to get exposed to an asset without actually buying it. In a way, it's like what Grayscale is doing, selling Bitcoin Trust. But these are like buying tracker stocks of a particular commodity. And being able to do this brings a lot of institutional money into cryptocurrencies. And now that we already see this happening for Bitcoin in Canada, US will not have any other choice but to fall in line, because what it means is that they've been caught napping in this particular instance, and Canada is taking the lead as opposed to them. But this is one of the evidence that those analysts were saying that we have not yet seen the major inflow of institutional capital. We just, in terms of market capitalization, we just recently passed where we were at the peak of the last bull run. So I think we're very much now positioned for a very, very interesting summer in terms of global market capitalization for crypto. Interesting news about our lovely Nigeria. I was telling somebody that I heard that Bitcoin was selling for $55,000 in Nigeria, and maybe I was saying maybe I should consider opening my bureau de change inside my house there and offering my services at a cheaper price to people, because that premium is reflected in what's happening in the economy. There was a map. I don't have that map, but there was a map that was showing the various prices that Bitcoin was selling in each country in terms of the US dollar equivalents. And currently Nigeria is the highest, sitting at 85. Philippines and other countries had relatively high, but no one is as high as Nigeria. And I mean, it's obvious. The ambiguous regulations and dismal economic policies are lending credence to the need to have something better as a storage of value than the fiat currency that the country holds itself. And of course, that stupid regulation that came out about 3 weeks ago has created a parallel market that can now not be undone, because what you now have will be digital malams and not malam on the streets shouting dollars, pounds anymore. You now have people using P2P platforms on major exchanges to sell. I told a friend of mine 2 days ago that if I want to sell £10,000 now to Naira, I can do it in 30 minutes or 1 hour max, all of it. I might not get someone who's able to offload to 6 million immediately. But if I break it up in 1 hour, I will get all the funds I need. Same thing if I want to do vice versa. If I want to move 20 million Naira, as easy as ABC, because you now have tons on tons of digital malams across their prices. You create another, they fulfill the order, you pay them, transaction closed. So I think we miss a great opportunity. I hope that we'll have opportunity to catch up later, but it's quite painful. We miss our opportunity as a country to latch onto something very big that could actually have the potential to take us out of our suffering. But knowing Nigeria and the leaders, I'm not sure they're interested in taking us out of our suffering. So we'll continue to move and see where. In another news, the Dubai, one of the Dubai major crypto funds is selling their Bitcoin stash to buy Cardano and Polkadot. Like I explained just a few minutes ago, the reason why Cardano and Polkadot are going to blow up. Like many other big-time crypto investors, they are also seeing the market. They're looking at Bitcoin and are saying, okay, what's the total ROI from this point? So if we take a cutoff from 50K, how much more can Bitcoin grow? The minimum projection is that Bitcoin will do 100,000. The maximum on the table right now is maybe like 500,000. But maybe that's not even for this year. But people are saying, okay, maybe 500,000 end of the year, or late or early next year. But the minimum on the table is 100,000. According to stock flow model, 100,000 somewhere between April and August this year. So 100,000 is just 2x. I mean, you just double the money. But because of the possibilities that exist within the crypto space, people know that you can 10x, you can 100x in some cases. So what they're trying to do essentially is 10x, because if you get into Polkadot is 32 or thereabouts dollars right now. Cardano is $1. If you get into that, and then those get the kind of attention that Ethereum is getting, you could easily 10x. Cardano can, I don't think Cardano can do less than $10 from where it is right now. Polkadot will probably do hundreds of dollars from where it is right now. So I think it's a good bet. I'm sure that $750 million worth of Bitcoin will have completely mocked up the market by now, because our dear Grayscale is always buying. And for those who don't know, there is only going to be ever 21 million Bitcoin in circulation. About 18 million plus, or almost 19 million of that has already been published or issued. Bitcoin is being issued currently at the rate of 920 something per day, every 24 hours. That's going to drop to half by 2023. So of the 920, something that's being produced per day, most of it is being bought up by Grayscale and Square. Square is the payment company owned by Jack Dorsey of Twitter. So between those two, they're always buying every Bitcoin that is produced every day. Because on the average, Grayscale buys about 10,000 every, 10,000 or 4,000 or 5,000 Bitcoin every week. I think it's only this week that their premium has gone down. So they have this Grayscale trust, as I earlier mentioned, that sells like a trust to people that's been backed by Bitcoin, but they sell that trust usually like 100% premium of the real price. So that trust can be sitting at $80,000 per one share of that trust. Right now, I think it's come down to close to 50,000 or 65 right now. But in some cases, it goes to 100,000, 120,000. So they are always buying up. And right now, they've gone ahead to file for so many other altcoins. I think it was about 6 or 5 weeks ago, or 4 weeks ago, that it was mentioning that they have filed for Cardano, filed for Polkadot, filed for Ethereum, and many other crypto assets to have trust on them. But I understand it's about 23 now that they filed for, and they seem to be very interested in the DeFi ecosystem. I'll talk about DeFi a bit later in today's call. So Grayscale, big buyers, they don't make noise, but from time to time, people come out and say, oh, this is what Grayscale has bought this week. But they don't make noise, but they're always buying. So like I said on the WhatsApp group, don't worry about what the prices are telling you, because that's not reflective of the real supply. We don't have supply of Bitcoin. That's the truth. No matter what the games, the hedge funds and the institutional investors are playing with the price, we don't have supply. We have real liquidity issues with, especially Bitcoin. So that's that with Bitcoin. Another interesting story I wanted to share before we move into crypto vital sign is the one of this bank called Baudier and Sier. It's one of the oldest and largest institutional banks in Switzerland. So what that tells me is that they have all the dead people descendants' money in their coffers. And now they're rolling out a crypto trading service. They want to partner with a company, another bank called Signum, to allow them to offer crypto services. So if you see what the institutions are doing and you study what they're doing and not listen to what they're saying, you will get an idea of where their heart really is. I had a long discussion on the chat today about Bill Gates and his aversion towards cryptocurrency and talking about energy crisis. And I said, you need to look at where the money is going. Don't forget about what anybody's saying, because when people are saying something, for the most part, they're doing something else. And I can give you an example. When the CEO of JP Morgan said he was going to sack any of his staff that was involved in Bitcoin, that same weekend, because Bitcoin crashed about 20 or 30% on the back of that statement back in 2017. That same weekend was when JP Morgan started their cryptocurrency and they bought that dip back in 2017. The same thing with in recent time, Guggenheim, before they bought, they were saying that Bitcoin can go to 400K. Then when the SEC filing was getting delayed and Bitcoin prices was rising, they were saying the Bitcoin price is overheated, that it should cool down, and that it might go down to 20K when it was about 30 something K. Then now that they bought again, they're saying, oh yeah, we think Bitcoin price can go to 600K. So don't look at what they're saying, look at what they're doing. So Bill Gates saying that Bitcoin is not good for the environment. Meanwhile, Microsoft is offering crypto is about to start taking payments in crypto, and probably sometimes down the line consider offering crypto services. I think it's a lot of years. I think people should understand where this is all going. And one thing I actually want to say is that this is the biggest transfer of wealth that is going to happen in our lifetime. You can write it down. It cannot happen like this, at least not in our lifetimes. I believe everybody is somewhere between the ages of 20 and 60. This is the biggest wealth transfer that's going to happen in our lifetime. It's already happening, but people are not aware of it. And the very smart people and the rich people, they know. So the only thing is, many of them do not want competitors with themselves. So they want to own the monopoly of their wealth, and they don't want people to compete with them at the top. So they will do anything to dissuade other people. So you see the FCA come and issue a vague statement about cryptocurrency. You see people like yelling, issue a vague statement, totally, baseless statement, just to make people afraid that where is this going? Where this is going is monetary systems are going to fail. Then the government will do a global reset and say we're not going to be issuing digital currencies. But their own digital currency is just a digital version of the same dollar and pounds and euro that we're spending. So it's like resetting the cycle of debt, quote unquote. It's going to happen. I don't know when, but it's going to happen very soon, because we can't keep going at this rate of inflation. Something has to give. And so politicians are not they're not interested in solving the problem. They just don't want it to burst when they're in office. That's the most on the hearts of politicians. So they're not interested in solving the problem. And that's why governments continue to print money, because it's the easiest way out. So this tells me that these guys are already positioning and posturing at the back end, try to see how can we get involved in this thing without making too much noise. So if you have a Bitcoin, please never sell it. If you have afford to never sell it, don't sell it, because it might be your biggest saving asset in the future. In terms of what's going on with the markets today, we seem to have lost about 145 billion over the last 1 week because of this market crash. And some of the gains went into altcoins, but it wasn't that. So net was still a loss overall, because it was 168 last week. It's now 150, 1503, 1.5 million and 3. Then in terms of where we are with greed and fear, we're back to lower grade now, which is 55. I've always said this, that we paper tested this indicator throughout last year, and we found out that every time the market pulled back or went back from green to either amber or middle, was a good time to buy. So you can see for the last 4 weeks, or the last 3 weeks, this is what it's been like: 81, 92, 93. Anytime we're close to 95 or at 95, most of the time the market just automatically, or the market makers automatically reset the market by dumping the price and triggering a sell-off. Another thing to note, just to mention, is that when the prices are going up, especially for an asset like Bitcoin, the prices on the derivatives are also going up on the margin market. So what are derivatives and margin market? Derivatives are like other products, the financial products that are specific to a particular exchange or specific to a set of platforms that are sold. They're not the underlying assets, but they are sold based on the price of the underlying assets. Margin is people who trade on the exchange borrowed money. So as the price goes up, the amount of people that take loans from the exchanges to trade increases naturally. After a while, there's something called funding rate, which is how much money the exchange has to support the positions that those kind of traders are holding. After a while, the funding rate gets overheated, meaning there is very little money left because all the traders are borrowing money for the exchange. So once it gets overheated and it gets to something like, I think, 0.1 or thereabouts, the exchanges have inbuilt mechanisms that trigger sell-offs. So it's either they get the whales who have very big, like the miners, to sell off on the market with very huge volume, or their own robots trigger a massive sell-off. Once it triggers a massive sell-off, that sell-off automatically triggers other sell-off, and the market just crashes. people don't usually understand that, but it's inbuilt in those exchanges. Once the funding rate goes high, automatically there's going to be a trigger set off. And then that's when you hear that a particular exchange is not accepting buy orders, or is only accepting sell orders. Sometimes they explain it as a glitch, but it's inbuilt. I think it's configured that way to ensure that, one, the exchange can cash out on many of the traders, and two, that they're not running at a loss when people are too leveraged in their positions. So anytime we see this kind of drop in fear and greed indexes, it's a good opportunity to buy. Was a good opportunity to buy last night, stroke early this morning. I think it's still a good opportunity to buy, because once this month ends, I think the price will start rising again. In terms of market sentiment for price, you can see that last week, both intraday and daily, we were in buy. Now we are sell and neutral, meaning that the pullback has affected how the price is behaving. And in terms of the technical analysis of the charts, I don't know that to show this. Right now, we're falling from 58,244 to 44,232. What is that? Let me get that to try to map the drop in terms of percentages. Yeah, 24. That's about 24.6%. So we have a 24.6 pullback, which I think is a healthy pullback considering the amount of capitalization we have on the market right now. I think it's a healthy pullback. Some guys were saying that they were expecting us to go all the way to 40 or 41. I was actually thinking we might drop to 40 or 41 as well, because that's the lower end of the price range. But because we had this price gain here when Tesla announced their buy, so I think it's serving as a cluster of price support. So technically speaking, I think we're going to close today above 47. Right now, it's looking like it might not be, but I think if we take a drill down to an intraday time frame, which is like the 4-hour, yes, it shows that we already recovered on this bottom. So even if we get rejected at the median, which is 48.7, I think we still manage to close above 47 today. If we do close above 47 today, then it means that the price is going to recover till the end of the month. And then by the beginning of March, I think the price will take off significantly. So that's in terms of the charts. Sorry. In terms of where we are in our market cycle for psychology, as I like to say, we were very much at the tip of trail before. I mean, we were going into 60K before the market was dampened by the market makers and everything crashed down. So we're back to the bottom of trail now. We're just between believe and trail, because we were getting warmed up when the prices were pumping. But I think this cool down is a bit healthy for the market, because what it means is that the market now has a base to launch itself forward to a higher price. So we can go from where we are now to the 60s or even 70s, and then come back to the 50s again to retest before going any further. But I think March is going to be a very interesting year interesting month for cryptocurrencies, generally speaking. We might not get to euphoria in March, but I think we'll be close, and then we might have a dump the last week as well, as usual. Another thing that happens is that many a times, because hedge funds and stock traders, like institutional stock traders, are also involved in trading cryptocurrencies, they tend to level up what they call it balancing. They tend to sell off their profitable positions at the end of the month. There's something called options expiry. I'm not going to bother you with that. That also affects the price. But because many of these institutional traders want to sort of lock in the profit for the month, they tend to sell off in the last week as much as possible. So just like the Forex market, we're familiar with the Forex market, first and last week of the month are always very active, because that's when money is coming in and when money is going out, or vice versa. So in the same way, I'm beginning to see that pattern as well play out here, because we're now having a lot of institutional inflow. I think it's going to be more as we go into the year 2021 because institutions will start scaling in more. Like I said last week, we reached $1 trillion in the market cap of Bitcoin. That is significant. It meant that one Bitcoin was more expensive on that day, last Friday, than 1 kilogram bar of gold. So institutional investors that are hitherto not taking note of Bitcoin, definitely it will show up on their radar. And when they start to look into it and hear people like Anthony Pompliano, Raul Paul, and Michael Saylor talk about, how Bitcoin affects both the macro and the microeconomics and the functionality and the flexibility of it as an asset class and as a storage of value, then they will start to take positions. I mean, that's not to forget the almost 6,000 participants in MicroStrategy's event earlier in the month, where we were talking about how to put Bitcoin on your treasury. Those guys are still out there. Some of them are still either waiting to buy the dip or already bought the dip. So it's not going to go down. Like somebody say, Bitcoin is going to go 20K. Forget it. It's not going to go down because you have people waiting to buy because there's really no Bitcoin. Whatever you are seeing now is just a play upon price action. It's not as a result of people actually selling their Bitcoin like that. So in terms of a knowledge transfer for today, time is fast spent. I needed to share this because there are a lot of people that are just joining for the first time. Many people don't understand the industry. Many people don't understand what's going on with crypto. I have getting a lot of questions about a lot of things. I've told people to sign up for the courses, for my courses. Some people have signed up, some people have not. But I think I just need to mention this so that people understand what this is. So this is like an entire industry sector on its own. I mean, entire industry on its own, a huge industry as that. Now, within that industry, let's assume that we have industry sectors. And what I'm putting on the chart is just to explain to you how this is. So Bitcoin is like the industry standard. Bitcoin is how you come into the crypto world. Is the gateway drug, quote and unquote. Is the mothership or the mainframe of the cryptocurrency world. Now, after Bitcoin or from Bitcoin, you now have altcoins, which are coins that are alternative to Bitcoin. That's how the word altcoins came to be. Now, these altcoins are broken into specific areas, which are like subsectors or industry sectors within the crypto ecosystem. So you have platform and ecosystem altcoins. You have exchange and utility token altcoins. You have oracles altcoins. You have NFT, which are like non-fungible tokens. And you have DeFi. Just to explain what non-fungible means is that non-fungible means uniquely identifiable token, which means if I have two non-fungible tokens that have similar drawings, they will not be the same one. Now, this might not mean too much to you, but in the area of art, in the area of gaming, it's a big, big, big issue. I mean, you have non-fungible tokens already selling for 100K per one because you can't have a duplicate of that particular one. So non-fungible tokens are new and relatively newer entrants, but the ones that we started with were the exchange and utility tokens and the platform. So when we talk about platforms and ecosystem coins, the first that comes to mind is Ethereum. The next is Cardano. The next is Polkadot, and then you have Cosmos. Now, exchange and utility tokens, you have KuCoin, you have CRO, you have Binance Coin. Binance Coin used to be traditional and exchange token, but now they're now playing in this region. They've acquired a number of companies, and they're trying to play as both an exchange and an utility token. I think that will give them the highest number of functionality across board. I know people like CRO have also tried to get into the payment space as micro competitors to people like PayPal. So on some sites like Ledger, you can pay with CRO tokens as opposed to paying the US dollar. But I think these guys are also going to be there. Cardano, Dot, and so on, also going to serve as payment systems of some sorts. I've not mentioned XRP because as of now, I don't know where I can place XRP. It used to be like a utility token on its own, but with the SEC ruling, it's questioning a lot of things, and until they get out of it, it will be difficult to place them in terms of where they sit in this industry. Oracles are oracles. You know what an oracle is? An oracle tells you what to do. It's like a divination or a diviner or a prophet, to use a more religious term, that tells you the mind of some other entity. So a prophet tells you the mind of God, an oracle tells you the mind of a deity. So oracles tell you what's going on in the outside world. It tells the blockchain what's going on from the outside world. So blockchain are like closed loop networks. They don't interact outside their network. They interact only within the network, and all the participants can only participate within the network. However, oracles help blockchain networks to get data from outside the network, interpret the data, and use the data for various purposes outside the network. Now, oracles would not have been possible without platforms and ecosystems, because platform and ecosystems were blockchains that created platforms and not just a peer-to-peer form of exchange like Bitcoin. So oracles like Chainlink, Band Protocol, SafePower are intermediaries, or in technical terms, or an IT term, we can call them integration or integration middleware that allows blockchains to interact with the outside world. This is still an evolving aspect of the blockchain industry, because newer and better ways are coming, evolving on how to use this in the real world. And people are discovering how they can apply this in day-to-day corporate organizations. So this is still, sorry, I think I moved my mouse too fast. This is still evolving in terms of what's being used for. NFT, I've spoken about it. You have things like Engine and Decentraland, Mana. They're non-fungible. They can be used for artwork. I think these ones are going to find a lot of customers in the aristocracy. Let me use that word. So you have a group of rich people that believe in, storing scarce commodities or scarce assets like paintings, sculptures, and all that. So you can have a non-fungible token that's a painting. There was an interesting non-fungible token I saw of Donald Trump as a baby, lying on his back with tattoo, lying on his face, naked with tattoo on his back. And that non-fungible token was selling for $120,000. I don't know why, but it means that you can create a copy of it, but it has a digital signature that makes it irreplaceable, and that's why they're so expensive. DeFi is a whole new technological advancement in the blockchain ecosystem, and it's basically decentralized finance. DeFi is going to dematerialize the world of finance as we know it today and eat it up. I have a class starting next week on DeFi. If you're interested in registering for that class, you can send me a DM or contact me on WhatsApp or Instagram. For existing students, you're going to get a discount, but for new students, it comes in at £200 because it's a 2-class series. Existing students are going to get 50% discounts. DeFi is the new frontier for blockchain, and what is happening in DeFi is creation of decentralized finances like you have in decentralized exchanges like you have in Uniswap, SushiSwap, and 1inch, and many others like JuiceSwap. These are exchanges that allows you to carry out trade from your decentralized wallet. So you don't even need KYC, you don't need AML. From your decentralized wallet, you can sell, you can buy, and you can stake. It's a huge micro sector that is expanding. And I think in the few months that we're getting into, the next 3 months, I expect to see a lot of boom on DeFi coins, a huge boom on both DeFi coins and ecosystem that supports DeFi coins. So I'm going to go into questions. Somebody asked me a question at the beginning of if you have a question on Instagram, please type your question. If you have it on Zoom, you can unmute your mic after I finish answering this question. The question was, why can't you give us, small, low-cost assets that we can buy into, as opposed to pricey ones like Kusama and Latent Tree that are already, multiples of dollars, or Kusama, in the case of Kusama, over $200. Two things. You shouldn't consider just the price of the asset, but you should consider for lack of a better word, the pumpamental of that asset. What the pumpamental is just a term we use, is how much that asset can yield potentially. So I'll take Kusama for instance. As I told somebody, I bought Kusama last year. I sold it twice at a profit, each at 100%, and I bought back again. Thinking that he has done his best, so I sold it. Then I saw that he was doing better. Then I bought it back. Then it did, it pumped again, and I sold at profit, and I bought back again this year. So I was telling the person who was asking, why should I buy Kusama? It's already expensive. I said, think of it that Kusama can become something between $5,000 and $10,000 at the peak. Would you be happy if you didn't buy it now? How much is it now? Probably $250 or $300. So from $350 or $300 to $3,000, that's 10x. If it does 6,000, that's 20x. Regardless of the fact that it is one token is 200 plus today. So if you bought 0.1 Kusama, for instance, which is $20, and it does 20x, meaning your $20 becomes $400. So it's not just the price, and that's the mistake people make with Bitcoin as well. So they look at Bitcoin like, oh, Bitcoin is so expensive. It's now 40 for maybe $50,000. You can buy fractions of it, because think about it. I bought one Bitcoin in 2017 December that I got lost. I probably bought it at $12,000. I bought 0.1 Bitcoin. $12,000, 0.1 Bitcoin was 1,200. If I still had it today, that's same 0.1. The fact that I've lost access to that Bitcoin because I don't know where my passphrase is. But if I still had it today, it's almost $5,000. And that was just a fraction. In fact, I remember saying to myself that at the beginning of last year, 0.01 was hundreds of dollars. Now 0.01 is almost approaching 1,000. So it doesn't matter what the asset price is. What matters is what room does it have to grow. So if you look at Cardano now, Cardano is over $1. I started buying Cardano at 30 cents. Now, it doesn't mean that you're still not going to get Cardano at $100 or even at $10. Cardano at $10 will be 10x from where we are today. Same thing with Polkadot. My first Polkadot, I bought it at $3. Polkadot is $30 now. I've sold it. I forgot about it. Then came back and realized that, wow, this thing has done 10x from where I sold it from. So when you're looking at an asset, don't look at the price and go like, oh, this is too expensive. What you should be looking out for is what room does it have to grow. I gave lit entry on the platform, on the WhatsApp group, and some of the ones we need to watch out for, because it is one of the first Polkadot projects that they launched. As at the time I mentioned it was like 60p, which was like 90 cents. It went almost like, I think it went to like maybe $4 or $5. It's come back a bit now, but it's going to grow. So if you're looking at it now and saying, oh, lit entry is $2 now, it's too expensive, how many can I really buy? But lit entry is probably going to do like 20 times its current price at the minimum. So are you going to say that because it's £2 now or it's $2 now, you don't want to buy it, and you want to go and buy, let me look for one now, it's very, very cheap. Even CRO is no longer cheap. CRO is now like 15 cents or 11 cents. I don't know what it is now. So you want to go and buy CRO. It doesn't mean that CRO is going to give you that same return. It just means that it's cheaper. And what I'm saying is, for many of the crypto assets, you don't need to buy whole numbers. You can buy fractions. So in making your investment decision, look at the upside. What headroom does it have to grow? And, what are the likelihood that you can get maybe 2x, 3x, 4x, 5x from that asset? Like I said, I can beat my chest that Kusama is still going to do 10x from where it is today, because not only is it a highly valuable token with very strong use case, it has very limited supply. So any capital injection will always push the price up. Same thing with Wi-Fi. When Bitcoin was 12,000, was it 12,000 or 16,000? Wi-Fi was already trading in the 30s, 30,000 region. And I told somebody that I said, Wi-Fi had only 40,000 units in circulating supply. So if it doesn't have more room to grow in terms of circulating supply, then any capital injection will drive the price through the roof. So that's the answer to that question. that was asked at the beginning. I don't know if anybody has any other question. We've done 5 minutes over time. Any question on Zoom?
Doctor, good evening.
Good evening, Albert.
It is always hard listening to you. Sometimes when the market is going down and we start having high blood pressure and we listen to you. we calm down. I've always been expressing concern about when to take profit, and you say when it's get there, you inform us. I think this week on our platform, I think some push was made that we should take some, I think profits, some percentage of profits on some of the some of our assets. See, before some of these posts are made, before the message gets to you, the prices has already start dumping. So for me, I've not sold any